right, everybody. Hello and welcome to the close stream where we talk about everything to do with the stock market close, obviously crypto markets, and also anything else of interest. We've got a lot to talk about today, as per usual. Got some big moves coming in here for Tesla. Obviously, Tesla getting close to that 800, the magical mark. Hope everyone is having a great day, great afternoon, great morning, great evening, depending on where you are in the world. And I'm certainly ready to go and get into this. So we start off the morning with some interesting stuff, or we start off the afternoon with some interesting stuff. XLRE, the retail sector, 1.56% up. So that's definitely more of the same in terms of we've seen a little bit of a spike in this area. We've also got utilities strangely doing better than other things. So two more defensive kind of areas doing better. Then we have XLB, which is the material sector. We like that sector quite a lot. XLP, and down the bottom here, XLC. So you'll notice that it's a little bit of a switch from what our norm is. Our norm is usually like, something like the tech sectors and the consumer discretionary kind of leading the charge, and a little bit more defensive on some of these today. So let's get into some stocks. Let's talk about the market indices, getting into it first. And the US 500, is there anything here for us through the session? So what have we really seen so far? Well, we've seen a few tests of this peak high over here, the 43.75. You'll notice that's been now resistance 3 times. So certainly an area that a lot of futures traders will now be looking at. And we've also got a great support down here as well that's been formed on the 5 minute. It's been a pretty slow session ahead of the FOMC meeting. It's very slow. Very slow. And in some ways, kind of boring. Let's move over here to the SPX. Let's take a look now at how it looks and if it looks any different. So we still have that 43.70 kind of 5 zone, and we still have a very good support through here. So this support is no joke, really. I mean, it's been touched quite a few times. We've got 1, 2, 3, 4, and we're now near the lows. 43.50, the level that Wall Street may look to break here, coming into the last 28 minutes, should they want to take it more short. Because as we know, 43.60 area, that was really the kind of last point of role reversal. So we have over here the resistance. The resistance should act as support. It's hovering in this area. I would like to see, if you want to see bearish intentions for Wall Street, to actually close underneath the 43.50 during this close session. So about 5 points off that. We'll see how that ends in, but you can see how we've trapped it up. Very easy trap here today, and yeah, some good futures trading to be had as well should it break either way. I think there's going to be a little bit of rallies or a little bit of sell-offs depending. Rotation into dividend stocks, says Scott Morgan. Yeah, certainly could be. XLRE is real estate. That's correct. Did I say something else? If I did, well, it is real estate, yes. J Dibble has a question. I guess my question is more about how to manage momentum stocks. Use the moving averages. It ran way too much. Use the moving averages, and has fallen since I exited a short too early, but I have to step away. Couldn't manage it. Yeah, I mean, you shouldn't really need to manage your position if you're in it. You should always have a plan, and that plan should be you've got your take profit already set, or you're following it through moving averages. You've got your stop loss set, and you've got your entry set. Any good trader will always have all of these 3 set before they enter. So you always know where you are. Now, if you don't have a specific take profit target because you're trading a momentum that's going very long, then you follow it by the moving average. And realistically, you just set levels. The whole point of a trader or an investor, really, you don't want to be spending as much time in front of the charts as you may think. So you may want to only do 1 to 3 hours a day. If you do any more than this, what's going to happen is you'll burn out. So a lot of you won't be here in 6 months' time. And it won't necessarily be because you can't get it done. You can't become a trader. You can't become an investor. You will burn out. If there's any older traders in here that have been around for a while, please let the community know about burnout. It's a very real thing, and people get very smashed. Nick Schmidt says, Tom, what do you think of the fake market futures sell-off last night? Nothing at all. I really don't think anything of it. It's just standard kind of movements of the market. So you're talking about it coming back down here and hitting 43.27. I don't really think much about it. I don't think much about that at all. Fake market futures, it is what it is. It'll move. It'll do its thing, but I only take real confidence in what's happening during the real market rather than that. John Glassy, $5. Morning, Tom. IPOB, if you can, please. Sure, we'll do that just soon. We'll have a look at the Nasdaq in a minute as well. And Layla, I'm not sure what it is. Lala 69 at FX Evolution. Could you look at December cotton at 100 short futures? Oh, soft commodities. I wouldn't trade it. Yeah, I'm not sure about the cotton one. Well, if we have time, we'll have a quick look. So very, very big chop here. We'll get off these futures markets for a second. Let's go to the NDX. So again, another one that we have trapped. Another one that you can use the 5-minute chart on. Very clear level of support. We're in the middle of nowhere land. You got your support here at 14,650. You got your resistance for the session at 14,750 or 14,740. Previous support over here becomes resistance, and we are stuck in the middle of the area. So coming into the close, you really want to see definitive breaks either way, whether it be down or it be up. If you don't get those definitive breaks, it's not telling you enough in the close to really make a very good decision. And in general, you will get usually closures that come to key levels. So being in the middle is not usually what you want to necessarily see. You notice the markets are pretty flat today. So I think the FOMC meeting is probably what it's waiting for. And that makes some sense. Let's go over to better news, though. And that's going to be in this one here, which is, of course, Tesla. Well done, guys. Look at this thing. Looks like it's going to hold above 800. Now, this is massive into the close. We've talked about the 800 level. We've talked about how important it is to break past these key psychologicals and to allow the options to obviously flow. So it looks like we're finally going to get above 800. It's unlikely that it's going to close underneath this, but you can always wait till near the end. And this is probably one of the better stories of the day. 23 minutes away here. We've got Tesla 806. I would like to see it even an 807 in terms of close, just to really belt all these wicks out. But this will be the first closure above 800. And then that, of course, opens up the next levels, which is going to be somewhere around that 880. We've been bullish Tesla here for a while. It's been doing well in a market that hasn't been doing that well. And that's because of strong price action. So this is a pretty significant closure. As we know, we'll watch this right into the close because it's such an important level to get above 800. And we've got that series of higher lows that came in as well. So some people will even be looking at it from an ascending triangle standpoint. They'll be taking that distance, extrapolating that out, and looking for these numbers. I think that it's better to look for even bigger based on the fact that you've got that 880 very clear target for what traders will be looking at. So Tesla, really impressive here, guys. Very impressive chart. Been great for quite a while. Slow and steady, but you got to remember, if something's going up during a downward market, it's pretty strong stuff coming through. Good rotation into what is traditionally a better seasonal for Tesla. All right, let's have a look at this IPOB. Gonna have to hope it's this. It's not this. I don't know what IPOB is. Well, I don't have the code. Send it to one of the mods and I'll see whether they can message me what the code is. So unfortunately, that's not working for me. Let's have a quick look at cotton, just out of interest. I haven't checked. I do not suggest people trade soft commodities. I mean, overall, it looks weak. Looks like it's had like a bit of a sugar rush and it's coming back down into maybe these 95s, these 100 levels. That does look weak. But I do not suggest that any novice traders trade these things. Cotton, wheat, orange juice, pork bellies, whatever you're wanting to look at. Don't look at them, guys. I've been there, done that. There's a very large roll cost on these contracts. And you can get smashed by natural weather events. So you got to remember, like, one of the things that happened to me was a twister. it took out a whole bunch of fields, and then all of a sudden the thing went reversal. So you can lose a ton of money here with news. This is a weather trade. A lot of these are weather trades and economic, like they're all based on weather and crazy bugs and all sorts of, locust swarms and other things. You don't really want to get involved in these ones. So a few people I've noticed have been saying, "Oh, I'm looking at buying the QQQ because the 10 years coming down." It's not a good enough reason to buy the QQQ. If it's going to react, it's going to react instantly. Remember, we still have an overall upwards trend here for the US 10-year. First and foremost, is the QQQ, the Nasdaq, giving you a shorting opportunity? Is it telling you to go short or go long? If you see a break of resistance or a break of support, then you do it. Don't be reactive to the 10-year. Just use the 10-year as, that makes some sense. Okay. The 10-year is still relatively high. You got to remember, it's been moving up here. And really, at the same time, the QQQ or the Nasdaq hasn't really been moving down any further. It's just an overall concept. If you believe that this is starting to look like it's going towards this level, and you think that this breakout's significant, and you think that there's a chance of the 1.7, 1.75, then that's good to know. But ultimately, unless the Nasdaq is showing you the direction, the breakouts, you don't use it. It's like any of this supplemental information. It helps you gain confidence in the trade, but you don't require it. It's just a good way of confirming the bias. So yeah, at this stage, I'm pretty bullish on the US 10-year. It's coming down back to a resistance level, becoming support. This is exactly the normal moves that you expect from something like this. Welcome also to the almost 700 people we've got here already live into the close. Big stories of the day, probably Tesla moving through that 800. We've just seen some selling coming into the market indices. We'll look back at over that, and it will be very, very good. Net's still running. Yeah, Net's doing amazing. It's a great company, but following the trend there probably is not. If you're in it already, then great. And if you're not, then probably don't chase that one anymore. It's a great company. I like Net a lot. So, yeah, fantastic. Now, I think the biggest thing that I see here is if we look at all these hyper stocks, we look at things like Beam, Edit Crisp, Net, all those ones, they're all doing quite well. However, the big kahunas, like things like the Apple is closing negatively here. So this is another negative day for Apple. In fact, it's going to get under 142. So again, this points to me thinking, not everything's so peachy in these markets. I mean, you've got weakness looking candles. I do not see strength here, guys. Does anyone see strength coming into the close? If anything, I see weakness coming in from Apple. I see absolute flat as attack coming in from Amazon. Google looks very weak. Remember, what these FANG stock does is very important. And speaking of FANG, let's have a look at the FANG. It's another, if I'm trading swing and I'm a bear, this is a perfect zone for me to take the short. So a lot of people say, oh, there's no swing trading at the moment. I don't encourage people to short the markets because I think that most people aren't ready for it. But yeah, this is the perfect short. I mean, you can see it here. Rejection candle, and then you get that break close. And then, of course, you're getting the weakness coming in from the FANG here. Where's the super important zone? Well, of course, it's going to be around this 5130, 5100 area. You close below 5100, well, then we're talking serious, short off in the FANG stocks. And these will drive the market down, specifically drive the NAS. So why are we seeing a bit of sell-off? I think it's because these ones here, Apple, Google, Microsoft, they look crap on the charts. They all look like they're turning around. This is a crazy moving average touch. You got rejection. I mean, 5,300. Look at that. You cannot deny this is super crazy, and it looks very good for a swing trader that's taking shorts. That is an entry, and we've talked about this quite a few times in the closure, like in terms of how good these moving averages are. Now, shorting is not easy. Buying is much easier. Being an optimist in the market is way easier. And if you short, you've got to be nimble. You've got to be incredibly fast, and you cannot have long-term targets. Some people say to me, oh, Tom, I see, head and shoulders here. My target's down, all the way down and, wherever land down here. The problem is, how often do you see these head and shoulders work out to the negative side? Very irregularly. Wonder why there's that strange volume spike as well that happens here. Geez, that's huge. I think it's fake, but yeah, who's a CFD. But yeah, overall, very important zone coming up here. We'll start covering this on the main channel in terms of the videos because you know what? It's such a key level. We've got to focus on the FANG. That's going to be one of the big things. So US 100 here is starting to sell off, as you'll notice. Starting to sell off a little bit there. Let's go down to the 5-minute chart again. There we go. Just putting that pressure on the downside. So we came into the stream, we trapped it up, just closed the 5-minute underneath. Looks like they're trying to make their decision into the end of the day. This is what makes end of the days exciting. Notice how it just suddenly switched. In the hour of power in the last 17 minutes or 15 minutes coming into the close, they're trying to make a decision for you guys for what the futures is going to look like and on the rest of the sessions. Now, it doesn't always work this way, but yeah, that's what they're trying to do. They're trying to say, well, you know what, suckers, we want to sell this off and we're just having fun with you all the way through the day. You buy the dip, you buy the dip, you buy the dip. Lol. That's pretty much the scenario, unfortunately. Let me see if I've got that code for IPOB. Oh, the code is open. Okay. Thank you very much. Let's go to the daily. Very bullish. Yeah, great closure. When it got above here, it was good. Obviously, it's broken above that resistance. It's coiled, come down and gone through again. It's gone through this resistance. I mean, it looks like it's open to $25. That's the next big key. You can see it through here. Support, support, support becomes resistance at $25. Good closure. Yep. Some stocks are doing better than others through obviously this bullishness. Let's look over at our Tesla. Where are we? Still 803. Cool. Still above 800. Very good. Bradley B, $4.99. I've got it in my alarm set for 5 a.m. for the private webinar. Go long on the course, y'all. You won't regret it. Is it 5 a.m. for you? Wow. Oh, yeah, that's the one we're doing, of course, for Wednesday. Yep. So that's our night. Well, thank you very much, Bradley B. I'm glad you're enjoying the course and everything like that. If anyone's interested, you can check out the description down below. Closed the last of my Tesla at 808 earlier, waiting for a retest. Okay. I still think Tesla looking pretty good. What's up, Juice? Why are you angry, man? What's going on? Morning, Tom. Do you think the base is setting up on Trip? Let's have a look at Trip. I haven't looked at TripAdvisor in quite a while. Yes. Yes. Yes, yes, yes. Good spot, bro. Nice. So you got a few little signs of slowdown and recovery going on here. Obviously, that downward trend line that you've got is being fixed. And then on top of that, you have a fantastic level of support coming back through. Yes, I like it, dude. So really what you're doing here is you're saying, okay, where are we looking for a closure? So notice how, yeah, we've got a kind of like a whole bunch of wicks here. And then we've got wick rejection, wick rejection. Wouldn't it be fantastic to get a closure above there? I'm going to put this in the watch list because it's pretty damn good. So we'll grab that one over here. Put in speculatives for the time being. Yeah, fantastic bottoming effect. So you've got your double bottom. You've got your base. You've obviously taken out this low, which would have got a lot of people's stop losses, previous resistance, previous support, perfect level for it to find it, 32. It's coming back to 36, and now you're looking for a closure out from here. 2050 cross will happen at a very similar time. That's pretty traditional with double bottoms. So generally the way you look at it is a 2050 cross will happen just after or just around a double bottom breakout. You always know it. You don't actually need to. What you'll find is as you get more time in front of the charts, you actually won't need to have almost any indicator on the charts, maybe just volume. And the reason why is because you'll always know where it's going to be. You don't need any of your indicators. They're always going to show you the same type of setups at the exact same points. $40 would be the target here initially, but that's only because I would still be a little bit worried about this level plus the 200 daily would be also a bit of a resistance. So you can see the take profit, but overall, very big repair. It's a good base. And yeah, that's the type of thing I look for. It is. So market's still coming down. We'll watch them side by side. We've got 10 minutes here into the close. So we've seen, where are we? 43, 44. Okay, cool. So let's get down to the 5-minute chart. We drew these up before. We had our bases that we looked for it to close below. And then we've got the NDX base looking for it to close below. So these are both pretty bearish looking little closes coming into the end of the day. Nothing, spectacular. I need to make that 28. Nothing spectacular, but they would be bearish closes, should be hold underneath. So 43.45 and 14,600 and 44. So marginally just on the lows. Remember, the importance here is Wall Street is selling into the close, and they're doing it off what was a few dip purchase potentials for people coming into the FOMC meeting. So with that weakness that we've seen in the daily candles, those weaknesses that look like that are coming off the 2050, this is the significance. I'll read some chat now, and then we'll go back over. Chainlink, yeah, we'll do Chainlink soon. That's a crypto. We'll do it after the stock market closes off here. Farah says, Tom, can't wait for the time I'll be able to see charts like you. I think you just need to focus on a couple of basic strategies. So as I told a few people that if they're interested in doing it, we've opened up like group mentoring. It's pretty damn good. So if you're interested in doing that, you can jump on over to FX Evolution. That will definitely speed up your time. Remember, most of the stuff we're doing, we're just speeding up and telling you things that we've taken a long time to derive. But in essence, if you're looking for, base formations, you're looking for recovery formations that are based on trend lines being broken through, it's a very simple kind of strategy. In other things that you want to be doing is you want to be able to realize and step back and say, okay, is this really important? Is this an important zone? Is this truly an area I want to be targeting? And what you'll always find is that not every day there is a trade somewhere, okay? If you followed every market, there's obviously a trade somewhere in some market. But for you personally, there may not be a trade every day. And a lot of people cannot get past that. And that's probably why they lose. They think they have to always get into a position. So Tesla's still holding above 800, which is a massive thing into the close. We'll probably move over, or maybe we'll put 3 on the screen here. What do we got? So there's an option. Here we go. Got 3. Let's put that Tesla up. It's got 8 minutes till the close. Tesla's still above 800. Very important that it stays above this level. So 805. Come on now. We'll show you the daily. Let's put the daily on. You can see the significance of the breakout here should it occur. So Tesla probably the most interesting stocks in the big ones. The other ones that we're still looking at, and we're showing the weakness here, guys. If you're coming in, you're joining us. The 800 people are joining us. Thank you very much for the likes, guys. Appreciate it. Apple, Google, Microsoft. I believe these stocks are showing us the way. Regardless of how you feel about the market, these stocks are huge. They're the big ones, the big kahunas. Did anyone else see how good solar's been? Anyone in the solar market? We'll come back over to this chart in a minute. Look at this. Look at the SPY. Look how crap this looks. We mentioned it yesterday in the video. Rejection, 2050, rejection. It makes sense to be selling, guys. I know it seems improbable, but I don't suggest you sell unless you know what the hell you're doing. But if you are thinking about it, it makes sense. We've got rejection week showing weakness. We've got weakness again. We've got weakness again. We move back down to this 430 area, 428. And of course, we close below that. We're starting to talk, dirty. We're starting to talk 420. We're starting to talk 405 on the SPY. They're going to be the key zones that many people will be looking at. All right, I want to show you 10. Solar ETF. Look at this repair. We saw it yesterday. We discussed it on this literal area. We didn't discuss TAN, but we discussed solar becoming very, very bullish. And all of a sudden, solar is just ramping. Look at this 85.78 on the solar active. One of our favorites, N phase, completely belted a very important zone today. So support, becomes resistance. There's the candle that I always love to see broken. There it is, right there, that pin bar rejection, or many people know it as a shooting star style candle. And then it busts that and it goes mad. And now, of course, it has the next target at 180. So very, very cool here in the solar active. If you miss it, things like this could be, occurrences. But yeah, once we started repairing on this, we did a repair here, a smaller time frame. We repaired the TAN, which is the solar index, repaired. Fantastic. It's actually probably one of the better sectors that I'm seeing rotation into at this point. Uranium. Which stock for uranium would you like? I'll do uranium again. Lodowski says solar. Yes. Yeah, it's been pretty sweet. PK Summon says, I haven't made a trade in 4 days, waiting for 8-10% correction. It's no problem with not making a trade. I think if you have like open trade styles, so if you have like something I do in the mentoring is I talk about an open strategy, a closed strategy, and really my whole purpose in everything is this one is more time intensive, but you always have a time of the day. Then the closed strategy is less time intensive. So if you're like a part-time trader or somebody that doesn't want to spend much time from the charts, that's your tick, because you only have to do 45 minutes a day. So a lot of people think you have to do a lot. Over here, it might be like 1 to 2 hours. So if you have these two strategies and then you have some basic other concepts, really you don't have to put that much time in front of the charts. And that's the big thing. I burnt out a few times over the years. Remember, I started in 08, and you don't want to be doing that. How are you reading the difference between the futures and the actual? The futures are used more as a trading tool, Urban. So he's talking about indices here. I'm going 4 minutes into the close. I'll show you guys all the important levels. So we need to wait for the close here. How are you reading the difference between futures and actual? Well, basically, I'm looking for the real market to show us the close. So when the real market comes in here in 3 minutes and it goes, let's say, it would be pretty disappointing if it just closes at 43.50 because it hasn't given us any direction. But we look here for the market to get into that last couple of minutes. And basically what a trader will do is, like a one that's been around for a while, will wait until that last minute, or they'll have like a futures ability to trade the stock after the market. Just after they see the closure, and then they make a more informed decision. So you'll notice here the market sold off. It's pulled back up to the 43.50. And I don't really want it to close at 43.50. It's still bearish, but overall, I would have preferred it closes down here, just because if it does that, then it's making a better decision. This is more, it's kind of like more like, oh, are we really making a decision? The decision is more marginal. So what you like to see is generally the market crack a level, and then it go through. Futures is not good for anything other than trading most of the time. It's not really good for finding your key levels. Use the real market to find your key levels. That's when the big volumes in. Remember, the US market, the US Wall Street guys, they control what's going on. So we've got 2 minutes here until the close. People are asking what my overall targets are for TAN. So TAN is already getting close to maybe some peaks here because it's already starting to ramp. I guess for me, some people will scale at 88. I tend to think that around here, around this 200, around 90 is going to be one key level. But I'm actually looking for this to bust off soon. Look how big this 92 is. 92 resistance. So if I've drawn like this, the way I've looked at it is this as well. I think it's kind of cheap compared to where it was. You got to remember TAN was 122. There are reasons why this could go up over time. And if we bust through this channel, which it is channel, we can take the distance and we can say, okay, what's our expectation? Our expectation's basically around here. So we need to put it above, and it's going to be around that 107 area. So that's my expectations. So coming into the close, we didn't get underneath 43.50. It looks like we've got 1 minute to go, 30 seconds. So we're going to close right on 43.50. It's still a bearish close. However, it is not as cool as it would have been. So let's see what they do here in the last 20 seconds. A lot can change in 20 seconds. You'd be surprised. It's still a bearish close, guys. If I was going with bearish versus bullish, I'd be bearish. Tesla holding that 805, so that's more of a bullish close. Obviously, some stocks bullish, some stocks bearish. So there goes the futures. Closed exactly. The real market closed around 43.50, sold off a few points there straight away into the futures. And that's the area that many people, there will be some shorters around there on the S&P. So this is the futures market, so it kept trading. NDX obviously is not. Let's go to the US 100 and you can see. So yeah, marginally bearish from the closure point. That's exactly where you expect them to try to sell it. You can see it here all playing out. See if they get a new low quickly in the futures market. We'll find out. Mark Wilkins says tan looks good to scale into a few weeks. Yeah, it's pretty aggressive, I guess, in terms of the solar stocks go really, really wild. So hopefully you guys are starting to see why the close is important. Trio goes, of course, market makers will go for a boring close. Yeah, well, they go directly for what they want. They go for directly for what they want. But what you'll notice is that sell off that occurs there straight away. The close is seriously important. I know a lot of people obviously we get a little bit less numbers on the stream here into the close, and I know why. It's not hype. It's not as fun as the other markets. But what we'll find is when we get a market turnaround, and I've said this a lot, is I'm not big on, thinking that shorts are cool for a lot of people. They're not an easy thing to do in the markets. Remember, markets are bullish tools, not bearish tools over the longer term. So what you're really doing here is you're waiting for this base to form on these markets. Now, whether that's for the US 100 at 14,000, whether that's the US 500 at 4,050, some really key levels. If that happens, what we're going to start noticing is we'll get stocks basing, we'll get stocks creating lightning bolts, we'll get stocks breaking out. And what I'll bring into the close tomorrow after the FOMC and everything else, I'll start to bring in stocks that are breaking out, that are breaking through resistances. Today, it's too easy because we've obviously got the Tesla, which is closed here above 800, which is a big deal. So, yeah, that's probably the biggest bullish story that we've got in the big stocks. But there are some other ones that have done all right. So we'll start to look around the markets in just a second. TAN also done well. Giovanni Murhi, $5. Tom, I've been waiting for $800 close for a while. Let's go. Absolutely, Giovanni. The 800 has been slow. He's talking about Tesla there. He's been talking about Tesla. Apple selling. Yes, Apple is showing us the way. Apple. Look at this, 139.88 futures market. Look at these sneaky rats. Look at them. Lobster dinners for them tonight. They're going home. They're taking the lobster dinners. Can you guys see how that happened? We saw it within our eyes in half an hour. We start the stream. We see the support. They break it. They come back. They retest it. And then straight after in the futures market, bang. Stuff for you guys. That's what they say. Lobster dinners for us and nothing for you. This is why the close is important. Why is Apple selling off? Who the hell cares? That's the thing. No, we don't. Look, people try to find a reason. I want you to ignore reasons. I want you to think, how many bits of news come out daily? Can you okay, I want to ask the chat this. You guys got big brains. There's 800 giant brains out there. Guys, do you really think that the news that's written in articles per day is the true reason that markets sell off or buy? Yes or no? Rex, just watch the last 20 minutes, man. Why is the SPY dumping? Watch the last 20 minutes. We talked about it. Darth Vader says it depends. That's true. Sometimes. Irregularly. So this is where your spidey senses need to be really strong. And what your spidey senses need to be is you need to be able to cut through the crap and figure out what is important and what isn't important over the longer term. So let's talk current markets. I want everyone in the chat to give me their biggest concern in the markets right now. What is your biggest concern in the markets right now? because most days you'll find that it's complete random. It's complete rubbish what they're writing. There are important things, but in general, it's not. So Alaric says slashing iPhone production from supply chain issues. Going to see more companies saying the same thing with supply chain. Look, I was reading a chip manufacturer, and they said about the Xbox One X. This is what they said. We don't think that we're going to have chips that aren't in supply shortage until September 2022. And they said it could be later. That's when they expect the Xbox One X chips to be provided in terms of them actually to hit some kind of like non-supply shortage. That's a year away. The market gets grouchy about so far away. That's a grouchy time. So people are saying tapering. No, that's not the biggest concern in the markets. It's what they'll say, but tapering's a bit of a joke fest. The biggest thing in the markets is not the tapering. It's going to be this one, the Evergrande. That is real. Okay. This thing, although you may think, oh, well, it's not here in America, it's not, it's not really going to hurt us. This is the real deal, because where there is this, there is lots of them. Think about it. How many do you think there are? There's lots of them. They're everywhere. It's a systemic economic collapse problem. Now, will it happen? I don't believe so. However, this is the true issue here, guys. That. I don't disregard that. I think it's a big deal. I think they'll probably cover it, but it's not the US debt ceiling, in my opinion. It is not tapering, because that's just an artificial Fed crapper. That's just an excuse to sell off. And we haven't, again, it's just the reasons. These are all excuses in plain sight, but which ones truly can cause a crash is what you're really looking for. And that's the difference between a really good dip buyer and a really bad dip buyer. Are you buying a dip where the fear is just fear for no real reason? Or are you buying a dip where the fear is true? And last year was very difficult to figure it out, because it was, if you asked me last year when the market was crashing, that the market would be back where it is, I would have said you're a crazy person. I would have said that. I'm not saying that I would have gone, oh, yes, it's so bullish and I knew it was going to V-shape and everything. When the Fed came in, the game changed, because they reacted incredibly quickly. But yeah, it was different. Darren Jones, $10. Thank you so much. Tom, last week I misclicked and bought 5 shares of Apple when I meant to buy a fractional share for $5. I held it, but today I sold it for a loss to buy Tesla. Oh, okay, Darren. You shouldn't have been down too much, should you? Last week, if we look at the Apple chart, I guess it was just, you probably had it about here. That is unfortunate, but we all place misclicks. Shame about the fractional stock going into the real stock. That sucks, man. But let's hope Tesla comes through with the goods. 805. It's down only barely in the post market. This 800 is a big level. Obviously, the market going down. If the market tanked 2%, Tesla will also drop. The TA cannot protect you from those types of big market drops. But if the market stabilizes or something, this 800 is a big break. So I wish you all the best and good luck, sir. Try to doing inspections of their banks first time in 6 years. It's a real deal, guys. I am not discounting it. It's systemic. It reminds me of the 90s Japan. It's the same kind of thing. Rapid expansion, huge amounts of craziness, and it's very, very bad. But I believe they will fix it. At FX Evolution, have you seen all the mainstream media picking up the situation the last few days here in Australia? Almost like they are preparing for the big R. I haven't looked at the mainstream media here. I must admit, I don't read it. I look purely just at the economics. That's all I care about. And the reason why is because when we're talking, we'll do the crypto in a second, guys. When we're talking about the markets and we're talking about news, like news just frustrates me. I mean, many of you guys would know we've been in lockdown for a while. In the end, the way I look at it is we focus on the financials here, and that's what we're looking at. And that's that in life. I don't need to know the other things. English teacher X $2. Thank you very much, English teacher. Appreciate that. Shane says Apple is selling spider cameras now, not phones. I might have added that, but that's right, Shane. PK Subbins made the same mistake before. I was supposed to buy 16 shares, but I typed in 160 shares. We've all been there. I'll tell you one. It was the first time I ever traded silver contract. So if anyone's traded a silver contract before, you'll know in some brokers, they're different. Yeah. So my first one was I traded a single lot of gold. Okay. Single lot of gold is about 100K. And then I thought, I'm going to buy silver. Okay. In my little account at the time. So I bought a single lot of silver. And on gold, it cost me about $10 in brokerage. How much do you think the single lot of silver accidentally cost me in brokerage? It scared this was a lot for me. It was a lot for me back then. Nick M Power, $5. Tom, check sentiment trader on Twitter. Big spikes and short ETF volume often corresponds to bottoms. Okay, cool. Nick M Power, sentiment. All right, man. Let's have a look here. I will check that out. Sentiment. Okay. I found 172K. I'll tell you the answer. It was for the silver, $750 brokerage. It was a lot. I remember it freaked me out. Thank goodness it came back because it was such a huge contract. It was about 20 times larger or something. I didn't realize that they were different. We've all been there, man. We've all done this. SPY closing bottom. Okay, what do we got going on here? What's this? Okay. So it's getting close to the bottom. Well, I agree with that. I mean, I've talked about this quite a few times. It doesn't seem to be that accurate. I mean, this didn't happen at the low. Obviously, it happened about halfway down. This one, he's pointing towards here. But see, this is what I kind of don't like about charts. You point here and you go, oh, yes, it's going up. Yeah, okay. But what about this one, bro? What about this one? We're just ignoring this one? And then over here, yes, that was the bottom. Over here, I probably wouldn't have pointed that one there. That one there went down a little bit more. That's kind of like the scenario I expect we'd be in now. Now, I haven't looked at what the hell this is, but that's what I would think. Thank you very much, sir. Appreciate that. Yeah, $700. My first trade is a Mexican peso in currency. Mexican peso. And that cost me a bit of brokerage too. The spread, the spread in currency back in 08, you would pay on the pound odd and these types of things. If you accidentally traded the Monday, the width of the spread was upwards of 40 pips. It was pretty damn big. Things like this don't exist anymore, but it was crazy. The brokerage was absolutely insane. English Teacher X coming back $5. DBC Commodities Fund. Do commodities funds follow technical trading patterns like all others? No, but well, I mean, everything follows a technical trading pattern. So when you break a fund, I'll preface that it depends what's inside the fund. So this one here is tracking all commodities, I assume. If it's tracking all commodities, then what we're in is we're in a systemic bull run, or we're in a bull run for commodities. So yes, there will be breakouts that are in accordance with the commodities that are in this fund. So let's say this is trading, I don't know what it is, but let's just say it's trading coal or something like that. If it is, and then we see that spike up that's occurred recently, I mean, this is a very good technical breakout from a resistance. So yes, it will. It depends what's underneath it. So I always say, like, say you're trading ARKG or ARKK or something like that, ARKK. If you're trading ARKK, you need to go and have a look at the top 5 holdings, do the analysis on those, and then you can also come back and have a look at whether ARKK is trading, sentiment wise. It will trade technically. It will go on ramps as long as everything is very similar. And in this case, you're trading a story, and that story is, of course, the recovery of commodities. And you'll notice that people think, oh, commodities are going out of control. I do not believe they are. I believe they were too cheap for too long, even though we got better at extracting them. And somewhere around in here is actually fair value. I also don't believe that monetary policy is inflationary. It is stagflation, deflationary in many ways. All right, we will do this crypto in just a second. I'll just answer this from Wilberto Carlos, $2. By the way, thank you very much, English Teacher X. Thank you, Wilberto Carlos, $2. What do you think of lithium stocks? There's nothing wrong with them, but lithium is not in itself rare. They have, with all these minor stocks, have the plan, guys. Lithium stocks, just like anything else, any of these mining stocks. We come from Australia. In Australia, we have lots of mining stocks. I'm well aware of super cycles and what happens. They boom heavily and then they bust up massively. Look to the left-hand side to understand your lithium stock better, okay? Look at what it's done in the past. You'll see booms and busts. Be prepared. Follow with moving averages. Nothing wrong with lithium. Just be prepared is what I'll say. You can actually fundamentally look at it. We'll do that on one of the closed streams. We'll have a look at fundamentals of these mining stocks. You can figure out when they're in super bubbles, not just based on price. DBC has oil, gold, silver, natural gas, corn, all the good stuff. Yeah. So specifically, it's breaking out right now. Certainly not due to gold and silver, but it's doing it because of natural gas and oil. So you want to look at the holdings of it. Make sure you understand the percentage holdings of each one, and it'll trade technically based on those. But if you wanted to focus on just oil and gas, then you would just go and focus on just an oil and gas fund rather than have everything else split. Elliot Jaff says, thanks for everything. Tom, just wanted to say that I love the market close stream, preferable to the market open. Market open's good if you know a specific strategy. But yes, market open is a trap for most retail traders. But I understand we'll never get the same we'll never get the same interest in the close as the open, because everyone wants to obviously day trade. You actually can day trade through the close into the next session, but most people won't start there. I look, I'm no different. I used to always look at the open, and I still do to a degree, but the close is actually where you make bigger swing trade based decisions. I know that sounds weird, but a swing trade is not based on that day of trade. It's based on multiple days of trade put together, of course. So a swing trade is always going to hold overnight. They're always going to hold over the sessions. All right, let's do crypto. Bitcoin. It's coming down a little bit here. Hold on there, cowboy Bitcoin. So Bitcoin hits 57, almost 58, comes back down. Should we be concerned? Overall, not really. As long as Bitcoin holds above 53, it's okay. Look, it had a big ramp. This is a pretty big closure. And I guess 60 is just a little bit too much for it at the moment. I'm not very concerned about the longer term trend of crypto, but I will say this, using technicals on crypto right now, you need to be very, very careful. So good base formations on crypto, I've decided they are tick. They are very good. Good base formations are very good. I said I'd look at Chainlink. Let's have a look at Chainlink. What I don't think you should be doing too much is focusing on every single time frame and saying, okay, is this Bitcoin really trading incredibly technically, or is Ethereum trading very technically? I think the market's a bit convoluted with the amount of traders in there and the amount of, more importantly, margin that's in there. Chainlink doesn't look very good on the charts. Was holding above 25.60. Now it's broken back underneath. You'll notice the little trend line here is what's holding it up. I wonder if that goes through the base. It does. So that's your little hold zone. You don't really want it to get underneath there for Chainlink. Link much weaker than the other cryptos in the big ones. There's a lot of FUD on this particular coin. So we go to the ADA. Let's give this an example. So if ADA closes above 235, let's say, is that a big deal for it? Absolutely, because we've formed a great base. That is the type of TA that I would use on crypto. I think that is a tick. I like it a lot. Do I like buying specific levels like a 2? Well, you might buy it from a psychological standpoint. That's okay. But you want to use more basic technical analysis when it comes to cryptos. So say like an example, here's KSM. If KSM breaks through 365, is that amazing? Absolutely. That's a tick. It's a great base. Do you like this level from a support standpoint? Yeah, I mean, it looks very good. It looks pretty tasty. I don't like the fact it's back down here again. But overall, this chart's pretty easy to read from that action. Now, if I was going in and trying to trade the 4-hour swings and stuff, do not swing trade it at the moment. You can scalp it. You can maybe day trade it. But that ain't a swing market. That is a trapped channel. What do you stop doing when you're in a trapped channel? You stop swing trading because it is a disaster. BTC shorts down. Yeah, BTC shorts is not going up. So BTC shorts, no information. So it's not the whales doing this in terms of they're not predominantly attacking it. Remember, whatever they did over here and whatever they usually do, these are very important spikes that we need to pay attention to. In this case, they are not specifically attacking anything. And ETH is also holding quite high. Ethereum looking for that 3,600 breakout. So use the bigger timeframes here on Bitcoin to make more informed decisions. The smaller ones, don't try to swing this too much. Swinging it has been quite difficult. But finding good bases, and when it breaks good bases, e.g. Ethereum over here, beautiful base, breakout, you can take those ones. That's how I look at it. More basic TA. CME, $5. Good on ya for all you do, Tom. Thank you very much, CME. Great to have you here. WB Productions, and appreciate the $5 as well, sir. Hopefully doing all right. Bernie Higgins, I'm short KSM. Hey, Bernie. The hell? Come on now. WB Productions, I'm long KSM. We like you, WB. But Bernie, come on now, Bernie. Come on now. What are you doing, sir? we don't want no shorting action on KSM. Come on now. You're trying to belt me, are you? At least we're around support. Intel, yeah, that sucked. Oh, I'm not playing this traditionally, so I'm not too concerned. But yes, straight back into support for Intel. Remember, Intel's big strength here is that they have a good run into November, but earnings is coming. And I don't know about earnings. And look at the earnings, 9 days. What I want to do here with Intel is see the earnings, see the price action, and if the price action improves, seasonally trade the November trade. So I've liked it over here for a little nibble with a certain strategy. It's still based on this area, but earnings. I hate earnings specifically for this type of stock. And why do I hate earnings? Because it has a tradition of sucking. Earnings sucked. Earnings sucked. Earnings sucked. Well, actually, the earnings here did it gap up. No, it sucked. Just generally, this is crap. So we need to wait for the earnings if you're not already in it, and then we hope the seasonality. The seasonality doesn't start till November, so we're still early on watching this one. We came in because we want to be early, we want to be nimble, but we need to know that that's when it happens. Snap still holding above 70. If you're interested in this type of one, earnings again coming up here 9 days. So that's going to be pretty quick. And we had a good little suggestion coming through from one of the community members about Trip. I think that's a relatively good closure breakouts should it occur. So we'll watch that one. We'll continue to watch it. People in BA, you continue to look for trend line breaks. Anything above like that 230 will be a big deal here for Boeing. Markets, yes, they are down. Let's give our thoughts on markets. So our thoughts on markets really is this, and we used the S&P 500. We had a support of 43.50 the entire session. That support was then broken near the close. It came back, retested it, and then slammed it back down. So on the close, we closed here, and then it instantly started shorting. And that's just pretty much Wall Street doing what they do best, which is getting underneath the 43.60, closing around the 43.50, and then the futures market selling at that point. Should we buy puts on Apple for the group? I would not buy puts on Apple. I would be looking at the potential for Apple moving forward. I mean, Apple, people are worried about, let's say, whatever news came out about chip shortages, this and that. Overall, we're looking for our community trend line. We want the community trend line to be hit, and somewhere between this and the 130, we want to see that bounce occur. Bitcoin down to 0. Don't think so, Cranberry. But I see if you hate it, that's fine. But 0 is not going to happen. What happened to COS? That thing's alive still? But I haven't looked at COS in a long time. Hey, it's up. Well, it's obviously Wall Street betsing, because there's only, remember, the left-hand side's a pumpy and a dumpy. If COS is up, does that mean that AMC did okay? Interesting. It didn't. Usually they're kind of like hand in hand. That'll just be a social thing, the COS trade. I'm not a big fan of those, but it'll just be a social thing. For AMC traders, boy, oh boy, you want it above there. Nice closure. That'll get some ramping. Back up to 42, past 42, very strong. So if you're looking at this, you're looking at closures above those candles. ZG. Zillow. Yep. Showing the signs of the recovery. There's the downward trend line. Obviously broke through marginally. I can't remember why this trades two different codes. Someone else can tell me, probably out there. Maybe it's not the same thing. But we've got here the supports. I like it. Look, we've been watching this for a bazillion years. It's finally showing the signs of recovery. You could do worse. You could do worse. Hyatt ramping after a long downtrend. Yes, we have Hyatt in our watch list. We like Hyatt at this stage. Great seasonal here. Fantastic breakout that was picked up by the community. And it's just continued to go strong. It's a great seasonal. Very strong this season, at this point of the year. If you're in the private community, grab the seasonality on it. You'll notice it's pretty good. How long did it take you to find consistency? Years. Years and years and years. But the difference is that I've kind of spent a long time floundering. You know, part of the reason, like, we have a course, and you could go and check that out on fxevolution.com, is because it speeds your process up. You need to think of the market as always trying to steal lobster lunches from you. And when you understand the psychology of the market more than anything else, each candle becomes a story. And that might sound ridiculous, but actually you're reading the story of the chart. Is the story making sense? No one talks about this. They're all like, oh, head and shoulders or double bottom pattern, take it here or something like that. That's the conventional way of thinking about the market. But when you think about the market as a story and as understanding the true psychological impacts of certain breaks and certain things happening, and obviously that creating this FOMO effect, or that creating a psychological effect on people, what you'll find is the story is more important than anything else. It is the price action reading, but it's the story of the market. And I've talked to some dudes, known some pretty big guys in the industry, people that wrote some pretty damn good papers in TA, you know, back into the 70s and 60s. And we all agree that that's the most important thing. that you need to understand the psychology of each candle and what it's telling us and whether it wraps into the overall story. And if I knew that at the beginning, yeah, it would be a lot better. It took me a long time to figure that out. It's basic sounding, but it's like anything. Everything's basic when you understand it. I'm sure if you're a surgeon, it's easier to perform surgeries once you've done it 10 times. We think from an outstander's, maybe there's a doctor out there, we think from an outside's perspective, my God, it's like completely mind-boggling what they do. But once you've done it a few times, it becomes a lot easier. Or once you understand the process, it's like easy as, yeah? I'm sure everybody in their job that's professional out there working in their job, I maybe can't build a house. I think that's too hard. But for a builder of a house, it's easy as. Make sense? What's that big apple candle at the end of the day? The big apple candle is the people getting concerned about shortages again. Nothing new. It's the same old, 139.50. So Apple looked bearish into the end of the session. Google looked bearish into the end of the session. Microsoft looked bearish into the end of the session. Microsoft has the buyback on it, so that's why it's holding up. Haha, the doctors left since it came up. They are the worst traders. Yeah, they're pretty crazy. The doctors have high margin accounts. They're crazy. It's because they can replenish their money so fast, so they get crazy. Doctors pretty wild, pretty funny. It is pretty funny. Chris Smith says, I can't build a house or do TA. Damn it. What can you do well, Chris? Maybe you're an expert golfer or fisherman or something like that. I don't know. Expert truck driver. You do something better than me, I'm sure. Absolutely. Lodowski says Zillow has 2 codes because of the voting shares and non-voting. No worries. I always forget why they had 2 of them. Thank you for telling us. Andre says, hi, Tom. Can you give us a quick opinion on forecast analysts? Tesla, for example, 12-month target, according to Goldman Sachs, is plus 9%. JPM says negative 60%. How can they differ so much? When was JPM's last update? Look, analyst people, they make calls, okay? These calls they'll put out in the report, and if they get it correct, there are certain stocks where they might make outlandish calls, okay? Outlandish. Now, how often has JP Morgan and Goldman Sachs been wrong on Tesla? Almost every time, okay? Almost every single time. Because they can't actually work out how much it's worth because they're looking at the fundamentals. They don't look at the future, expansion and all these things. These analysts, they can't look past that. So say the JP Morgan guy, he'll be looking at it on its fundamental basis and he'll look at it and say, okay, well, this thing barely makes a profit. It's all the way down here by my metrics. So I'm going to stick to that. He might be old school. He's old school. The Goldman Sachs guy is going to be looking at something else and he'll be new school and he'll be like, okay, cool. I think it's up here. It's complete. They're guessing on that stock. I like, good luck trying to figure out how they come to those derived prices. What I like to do with all those kind of things is basically take the average of all of them and that becomes an interesting target zone. So if your stock's down here and Wall Street averagely think it's up here, what will often happen over 12 months is the stock, when it breaks out, you'll see a lot of people buying it because they'll be getting it back to the average. So you'll try to use that to your advantage. Remember, why has this happened? Because everyone goes to their clients and they say, client 1, Timmy, Jimmy. Wait, guess what? Our analyst has this 12-month target, 20% away from current price, Jimmy. Don't you want that in your 401k, man? And he's like, 20%? Yeah, our analyst upgraded it recently. It broke out. We love this. We love this stock. And he's like, oh, man, 20% cheaper. I'm going to buy that. And then they all buy it. And that's pretty much the psychology of it. You'd be surprised. That's pretty much what happens. Jimmy gets into those stocks. CRISPR post-market went insane. Let's have a look at the gold CRISPR. Down 3.6%. Ouchie. Back down we go to 98.90. This stock's looked pretty sick for a while, unfortunately. I do like the CRISPR stocks on the longer term, but at this stage, not much for us. Okay. All right, guys. Well, I think we'll probably finish it up here. Shizzy Wiznut probably says it right. Things to remember in crypto: do not spend more than you're willing to lose. True. So I think the big stories here where we saw a little bit of bearish close there for the market. The overall story is still bearish. If we go and have a look at the SPY, let's just bring the SPY up so everyone can see it. Here we are. This is our overall larger time frame kind of trend. And you'll notice it never broke through our trend line on the daily. It has some important points. 2050, weakness. Bearishness, bearishness, came back to get liquidity. And then we get another bearish day. And this is pretty significant. It closed underneath that 435. That 435 was our previous little bit of resistance, which should have acted as support. The close yesterday held right on that level. And today we made a decision to go further weakness. So I'm thinking back down into the lows is the most likely scenario. And then if we get back down there, because it's the fourth touch, there is a statistically higher chance we actually get through it. And then we see that further weakness. Now, I hope that this is over in 2 weeks. So my ideal circumstance is that the market kind of tanks itself. It goes really, really short, just briefly. And then we see a bit of a recovery. Now, I don't think it's necessarily going to be V-shaped. So what I mean by that is I don't believe we're in a market that just rebounds like this anymore. I think we're in a market that does the slow as you go kind of, approach. Maybe more like this. We're all used to the V-shape, bang, all the way back to the high. So if everyone's used to that, there's more likely going to be a lot of traps in the new recovery. What do you guys think? You agree or not agree? J Nibble, CHF $5. Hubs ran crazy today, went short at 810, covered at 800, scaled out because it was bouncing up almost instantly by $5. Is momentum traded differently? This is a pretty loaded question in terms of, is there a way that you trade? Well, this is more of an insane trade. Like, as in this stock went crazy due to what? Earnings or something? What I don't even know what. Some announcement. Anyway. Yeah, I mean, this becomes pure speculation and FOMO once it moves too much. So how much is this percentage candle from bottom to top? About 17.81%, $32 billion stock, pretty significant movement. It's not so much that momentum's traded differently. It's just that if you have a rapid rise, how often is it going to be able to hold that come into the close session when the market's going bearish? It hits 800, it busts it, and then it comes back down and most likely comes and tests the previous resistance, which acts as support. So I wouldn't really say this is a traditional, we're trading momentum differently. It's just a massive ramp. And then for me, it would have been 20 moving average. One bounce, gets underneath, get out of it. That's all you can really do. It's not an easy type of trade. These sound easy because you go, okay, well, I'm buying this momentum and I'm buy. But where are you going to set your take profit? Where are you going to set your stop loss? Where are you going to set your entry that makes sense to the rest of the market? These are the questions you need to ask when you're making a decision based on these. It's easy at the moment to say, okay, I buy and the ramp is happening and you're often be correct. But in general market conditions, I prefer the more technical trade, which is slow and steady. You see the breakout, you take that distance, you have a take profit, you have a stop loss set parameter, and you can control your risk. Here, it's much harder to control your risk. AT&T is a horrid stock. I'm sorry. It is pretty bad. The telcos, I don't even see how they make money anymore. Obviously, dividend is why people buy that. J Dibble says exactly, because I have I could have thought I wanted to short anywhere along that way. Yeah, you could have accidentally shorted 700, got belted. You could have shorted 750, got belted. 800, you did well. And then you think, I'm the picker of the market. Shorting is bad, okay, in these types of events. Remember, the market is an optimistic beast. Optimism, the market going long, is more likely that you're going to be correct than it going short. Shorting can be bought in, but only when you see the right things and you know what you're doing. Bitcoin's up 8% from last week. It's not crashing. Yeah, exactly. It's just a little bit of a tasty pullback. Andre says AT&T is my weakest position, negative 20%. Yeah, I don't see how they make money. You've got max saturation of mobile phones. Internet's not very profitable in general, or it's already got a cap profitability. It's hard to expand in that market. And people keep saying plug, so I'll finish up on plug. Let's have a look at plug power. Yes, $30 is achieved. Very nice. Pretty disappointing, really. We had that line for a reason. That closure should have led to more ramp, and it had to come back down and then pull it through. I don't like that. Not a big fan. That closure should have been much better. I mean, this stock, similar to the solar stocks, I guess, is currently ramping. I mean, your target is around $35-ish. This is your first target. I watched a shorter's YouTube. He called a 4-month uptrend a bear wedge. Yeah, you're going to fail there. Bear wedge. Look, shorters are right sometimes, but again, you look at where's my pullback chart? Where's my pullback chart? Here it is. So this is the average amount of times throughout time that the S&P 500 pullbacks. Okay, look at this. After the global financial crisis, you get a little bit of that volatility coming in. Then you get stability in the economies. Imagine if you were a big bear throughout all of this, or in just general. You got smashed, guys. There is pullbacks. There are dips to take advantage of putting your money in. Obviously, trading, you don't really care because you're just like looking for the daily trends. But yeah, in general, during periods of strong growth, e.g. that 1990s area into the tech bust, you have not that many significant pullbacks. And actually, one of the tellers you're getting close to the end of the cycle is probably what happened here in 18. So in the future, one of the things I might look for is I'm going to look for a period of stability, e.g. here, followed by instability in the markets, just as a warning sign we're getting close. And that's probably going to time in well with what I call a super cycle, which we talk about in the private mentoring. It's a very important concept. So if that times well with my super cycle concepts, then yeah, it'll make more sense. But in average, you get 4.6 times it goes underneath 5% pullbacks. I would say in the current market conditions, it's more like 3 per year. And that's all I expect. To be bearish is not easy. Also, to call a bear market after we've already gone back. So let's say we call another big crash. It's incredibly rare to see a crash followed by a full V shape, followed by another crash. I don't even know if it's happened. And you have to say that's a very important thing. Did you check Discord? I missed a super chat. Oh, did I? Andy Pandy. Sorry, man. Chris Smith says, I enrolled in the masterclass, so TA on the way. Fantastic. And Chantal O says, purchase the technical analysis masterclass. Great so far, Tom. Looking forward to being educated and improving my trading. That's going to be awesome. Great to have you on board, guys. All right, so Andy Pandy, I'm sorry I missed it. Luckily, the mods, if you're still there, I apologize, sir. Let's have a look here. EQNR. Equinor. Go the weekly. That's a nice breakout past that 190. It's in a pretty aggressive trend. You notice here the weekly 20 was pretty big pickup. It's had some fairly decent rallying. We're right at the high. So firstly, on the high time frame, we're basically at the take profit. So people did take profit. That's why it sold off. Daily 200, a daily 20 looks like a great level. Long leg doji, bit of bullishness. Oh, I feel like it's just a profit, and like it's at that profit period that just hit. People sold, it comes back up. It could just sit here for a while, coil, and then break through. But you are looking for a breakout above that 234. And if that occurs, I guess you see further ramp. Watch the 20 moving average on the daily. Very good pickup zone. A very good line of basically showing you the bullishness is still intact. And overall, there's no cause to be concerned, but you need to be aware it's at a take profit target. Thank you very much for the donation. I do appreciate it. I just had a question about WooCoin. Not really much opinion on this. Back down around support and it's buying off that support. Yeah, not much to note about this. Key level 1.11 from a resistance standpoint. And I also got a question about the energy select. This is from the private community. It's at resistance. So we saw the whole energy market come through that massive breakout that caused ramp. It went into the resistance. I expect some coil here and then further breakout, I would hope. And that's based on US oil going towards that 85. But when US oil goes towards 85, 86 a barrel, we better pay attention to it because around here would be where I think it's topping out. All right, guys, thank you so much for joining us on the stream. Appreciate each and every one of you. Appreciate the supports. Fantastic stuff. And we will see you tomorrow for another close. At this stage, it looks like the markets are relatively bearish. See you then. Bye for now.